This Holy Grail indicator strategy will make you a millionaire. Okay, I'm just kidding. There is no Holy Grail to trading, and it's certainly not going to be an indicator. Hunting for a Holy Grail indicator is only going to waste you time. Real trading success is built from a logic-based system that allows you to have clarity around the market and understand why things are happening at different times. So I may have clickbaited you a little bit, but in this video, I'm going to share with you the only indicator that I use and give you 3 reasons why this could be very beneficial to add to your trading toolbox. So the indicator that I'm going to be sharing with you today is not a traditional indicator. It's not going to tell you when to buy or sell, but it is going to give you a bit more clarity around your trading. So let's head over to the chart and I'll show you it now. The indicator that you can see on the screen is the FXN Asian Session Range. This is an indicator that you've probably seen in my past videos and a lot of people ask me about. This indicator just shows you the major timings around different trading sessions. So what we have marked on the chart using this indicator is the blue box showing the Asia session, the green box showing the London session, and this grey reddish box showing the New York session. So how can this actually benefit your trading? The first way that this indicator can benefit you in your trading is by allowing you to schedule your trading well. Now, you may not be aware that throughout different sessions, different currencies move in different ways, okay? So if we're looking at forex majors like GBP, Euro, or US dollar based currency pairs, these are going to move the most through London and New York. As you can see on the screen here, looking at GBP USD, the Asia session is totally flat. That's then followed by a London and New York, which have a lot more volume. And here you can see that same pattern repeated again, and you'll see this consistently throughout time. Not every day, but most days. So if you are a trader who trades major pairs and you are focused around the pound, the dollar, or any America or Eurozone based currencies, then you should probably stick to the London and New York sessions for obvious reasons that you can see here thanks to this indicator. In the Asia session and leading up to the Asia session, price action goes totally flat for these currencies. However, throughout London and New York, we get some nice volume, so you should aim to trade throughout this time, okay? Anywhere before or after this, you should generally not be looking to get into trades because you'll get caught up in this sideways price action. And you can see this every single day, or almost every single day. We have flat Asia and then fast London and New York. So if you are a trader who is focused on major currency pairs and major currencies, you should stick to trading London and New York. How can this indicator help you then? Well, if you see a trade and you're ready to place a trade, but you realize that the timing is too late in the day, you should go about probably not taking that trade because you're going to get caught up in the chop. Just take it tomorrow when London opens. So by having the indicator and having the sessions marked on your charts, you'll be able to avoid trading at bad times and you'll be able to take only good positions throughout the peak times, which will help you in the long run to get the best trades and not have to sit through the stress and sleepless nights of sideways price action. Now, a quick note on this topic is that if you are situated in the Asia Pacific area and you focus on Asia Pacific currencies like the New Zealand dollar, Australian dollar, or Japanese yen, you should actually shift this entirely. And the session indicator here shows you exactly why. When we're looking at an Asia Pacific focused currency pair like AUDJPY, we have much greater volume in Asia session than we do in London and New York. So if you're situated in this area of the world or you're focused on trading Asia Pacific based currencies, definitely shift your timing and try to trade through Asia session instead of London and New York. The second way that this indicator is going to help you is by understanding session characteristics. So I'm going to give you a little lesson about those now. So here I'm blessing you with my artistic talents to show you the different session characteristics. Now I'm focusing on major pairs, pound, euro, dollar for these examples, because this is the time zones I trade and I'm most familiar with. But you'll see throughout a lot of the major currency pairs that we have 3 different session characteristics set for each different session. These do not happen every single day, but they do happen often enough to definitely consider them. So looking at this, then we have the Asia session, and as you can see, it's generally flat. The London session brings some volume, and the New York session brings more volume. But the characteristics we want to take note of here is the liquidity that builds around the Asia range, meaning there's going to be orders either side of this range. Then in London, we often sweep out the highs and the lows of the Asia range. And leading into New York, we very often get a reversal against the direction of the London session. So what this actually allows you to do, once you understand it, is not trade Asia, trade through the liquidity of Asia during London, and then catch reversal trades into the open of New York. So this means whether you are based in the UK, Europe, or the US, you are going to have trading opportunities based around each of these different session characteristics. So let's go and take a look at some of these in action. Okay, so now we're looking at a real chart example of pretty much what I just showed you. Now, obviously, it's not always going to be as clean as it is when I show examples, but the characteristics will help you a lot of the time. So looking at this example, we have Asia, and this traded sideways, building liquidity either side. When we moved into London session, we then took out the liquidity above the Asia range, took out the liquidity below the Asia range, and then towards the end of the London session leading into New York, we had a huge bullish reversal. So most of London was bearish, sweeping the liquidity either side of Asia, and then leading into New York session, we had that reversal to the upside. Okay. Here we can see another example where we had Asia session, liquidity taken out by London session. We swept above, we swept below, and then into New York session. After this bullish rally at the end of London, we reversed into downside price action. So by understanding those session characteristics, you can build systems around the characteristics that often occur. Like I say, it's not an everyday thing, but these characteristics will show their face multiple times every single week, enough for you to make a profitable system around it. Perhaps you could build a system that aims to target the sweeps of liquidity either side of the Asia range. Or perhaps you could build a system around the reversals at the end of London leading into the open of New York session. And that leads me on to the third way that this indicator will help you, and that is by allowing you to easily identify session liquidity. So I just spoke to you about session liquidity and how around the flat sessions like Asia, we build orders either side. Liquidity is often taken out. If you need a video on liquidity, there's a card up here or over here, not sure which way it's going to be, but there'll be a card there to take you to a video where I explain what liquidity is. But when it comes to this session indicator, what we can actually do with it is identify session liquidity very easily. So we know that Asia session is going to be often swept out by London session. And this indicator simplifies things because we no longer have to hunt for the session liquidity. We can simply see it directly here on the chart. Now, it's not all just about Asia session. Sometimes if we have big news data, this can actually be seen around London session, for example. So a lot of the US news we get is going to come out during New York session. And oftentimes when we get news releases, we see liquidations of the London session range. You can see today at the time of filming this, there was a CPI report. And after a very high volume London session, we actually swept out liquidity above and swept out liquidity below. And now we will decide the next move. So this can actually help you to identify good trading targets if you are trading and scalping through the CPI news. If you were to get a sell on here, for example, an easy target for you to choose would be the low of the London session, expecting that the liquidity, which has not been taken up to this point, will indeed be taken out. Having these well-defined anticipations based around the session liquidity allows you to find solid trades with solid targets. What do you think? Is this indicator something you're going to check out, or do you not see the value in seeing the sessions on your screen? If you found this video particularly informative, I have a 70-minute free training that you can go and watch right now. The link for that is in the description, and that's going to open your eyes to a whole new perspective of trading and show you maybe why you're not winning now and how you can actually turn your results positive. So that's all from me. Thank you for watching the video to this point. I hope you've enjoyed it, and I'll see you in the next one.